All right. So guys, I have Charlie, the co-founder of Bitlayer here. So welcome to the stream. Welcome to the show here. Maybe just introduce yourself and what you do for Bitlayer and what you guys got going on.
First of all, thank you, Mike. Thank you for having me. Good to see you in the Bitcoin Vegas. And yeah, great to be on the podcast today. My name is Charlie, co-founder of Bitlayer. I'm leading all the ecosystem growth, BD, and on the non-R&D side of things, on the business, basically the business side of things in Bitlayer. So Bitlayer, we aim to activate Bitcoin DeFi by building this infrastructure around Bitvm, building this Bitcoin new generation trust minimized bridge and Bitcoin verifier as the true security equivalent layer two on Bitcoin ecosystem. So we started 2 years ago, and now we have around 65 people team full time globally. We are one of the fastest growing Bitcoin ecosystem on the DeFi side. Last year we hit all-time high 1 billion TVL, over 57 million transactions already made since we launched the mainnet. We raised 25 million led by Polychain Capital, Framework, Franklin Templeton, and altogether over 180 investors. We've been activating a lot of user acquisition and educating people what is Bitcoin DeFi since last year. Yeah.
That's awesome. So when in terms of the services and the like a problem that for the consumer, like every business wants to solve a problem, what would you say is Bitlayer's solution and what you guys are offering to solve the problem on Bitcoin?
Yeah, so everybody knows Bitcoin. It's being the biggest, largest asset class in the world, in the Web3 world. It's over 2.5 trillion now on the market cap. Obviously, the institutional adoption since the ETF approval is very helpful and had a huge rally since 2024, right? But the last 15 years, Bitcoin has been very limited on use cases. Pretty much only thing people can do is the standardized transaction, which is payment, right? Send one Bitcoin to B send one Bitcoin to C. You know, the UTXO model can avoid the double spending problem. So that's the only use case in Bitcoin which is adopted. Lightning kind of use the state channels to the cheaper, faster payment, but there's no DeFi capability, there's no smart contract capability, there's no verification capability. So what we aim to do is fully unlock those potential. Let the Bitcoin use as the liquidity assets, but support them on all the DeFi primitive across stable coins, lending, perp dexes, on-chain option protocol, real world assets, liquid staking, list goes on. So Bitlayer, we have over 280 projects already deployed on mainnet. And I think at least 50 of them are very, very active still. Some of them went TGE already, had a pretty big traction so far as well. We covered pretty much all the DeFi primitive. Each segment had at least 2 or 3 good protocols already deploying us. But the key infrastructure problem we're trying to solve, right? One is the bridging problem. So as we know, Bitcoin L1 never designed to have this mass adoption. It doesn't even have a smart contract. So we need to create this scalable layer 2 system and programmable system to empower the smart contract capability. So the first thing we need to do is having a solid bridging solution, which is secure and decentralized. So our Bitvm bridge is essentially trying to provide this new generation bridging, which is better, more decentralized, more trust minimized compared to wrapped Bitcoin, wrapped WBTC. So WBTC's underlying technology is multi-sig. It requires majority of the signers are honest to maintain the security. So if the majority of the signers actually get compromised, then there will be security vulnerability and hacks, such as the recent hacks in Bybit. That was the
Yeah.
multi-sig.
Yeah.
So we all know that. So multi-sig is now the ultimate safe, most secure solution. So what we want to do is using the Bitcoin script to build this on-chain fraud-proof challenge game kind of mechanism. So only one operator within our bridge is honest, then it's secure enough to maintain the security of the bridge. So it's way less trust dependent, more trust minimized. So that's kind of the difference between our Bitvm bridge compared to the multi-sig.
So is
Um,
Bitlayer built on an EVM or is it built on the Bitcoin network itself?
it's built on the EVM is a smart contract layer.
Okay.
We are EVM compatible. So all the smart contract happening on our chain is EVM compatible. So any DeFi builders who wants to build, let's say a lending protocol, they build that in Arbitrum. their smart contract deployment on Bitlayer is the same experience like you deploy on Polygon, Optimism, Arbitrum, the same. So it's developer friendly. No developer needs to recode anything from scratch. Not like other protocols, they actually require people to learn Rust on other language, like Calamity, that's in Stacks, or like some meta protocol. You have to literally learn a new language to do new things. So we want to kind of combine the good side of developer friendly with EVM, but have the Bitcoin security. So that's the verification components. I was about to say it. That's the second product we are building. That's the Bitcoin verifier. So that's the key kind of nuances I need to explain. So between Bitcoin sidechains or true Bitcoin L2, the verification is a key difference. There are two aspects of difference. One is economic difference, and the second is security difference. So economically, if there's no verification, meaning transaction doesn't really settle on Bitcoin, there's no fees paying to the Bitcoin network, especially to the miners.
Mm-hmm.
Basically, there's no security budget back to miners. And then comes to the long-term economic problem people have been debating, especially miners. Two rounds of cycle again. We have 2 rounds of halving on Bitcoin. Can the miners getting enough incentive to maintain the mining, right, and maintain the network security and our hash rate? That's a debatable question. It's difficult, right? Now, obviously, not everybody is as bullish as Michael Saylor saying Bitcoin going to go to $13 million per coin very
Yeah.
soon. Yeah, so the miners actually are very conservative. They need to do a business with very high cost of maintaining the operation of the mining pool. So need a new revenue stream. The second part is the security side. If the transaction is not verified and settled on Bitcoin block, it's not Bitcoin security, it's sidechain security with the validator sets. So I think there's multiple sidechains or other validator get hacked before as well. So if you're putting a lot of the funds into the Bitcoin sidechain, and there's some security hacks happen in the sidechains validator sets, then your funds is basically not secure. You cannot withdraw your funds easily, smoothly back to Bitcoin L1. Then it's not really that secure. So what a Bitlayer chain I'm aiming to achieve is Bitcoin security equivalent actual rollup, actual layer two. So it's Bitcoin security, which we trust, and we're paying fees, partial fees on the verification process to the miners. So we are actually contributing economic value to the miners. So the recent news we just announced actually a couple of days before we met in Vegas, that was the announcement we made featured by CoinDesk, Cointelegraph, Bitcoin.com, and a few other media. We are one of the first Bitcoin projects invested and also supported by the top Bitcoin mining pools, such as Npool, F2 Pool, and Spider Pool.
Okay.
3 of these pools have around 1/3 of Bitcoin hash rate. So the significant impact of this is the mining pool realized they need a new revenue stream, and our Bitvm bridge could provide them the new stream on the bridging fees, and they actually will help us maintain the security
So
of the bridge.
how exactly are the miners securing the network here? Like
Yeah.
are the transactions going to the miners themselves on the
So
bridge?
they will process our bridging transaction
Okay.
as the sort of the called a non-standardized transaction. So as I mentioned, like A send 1 Bitcoin to B send 1 Bitcoin to C. That's the standardized transaction, right? It's happening all the time. It's in the Bitcoin mainnet in the mempool. But some of the unstandardized transactions, such as like ordinals, maintain, bridging solution, all that, right? Those are the non-standardized transactions, which is pretty unique, right? It's not standardized. We want to make sure the bridging experience is good, is
Yeah.
secure, but also good performance. So having the miners to process those non-standard transaction, and they earning a fee, like partial fees by handling that, and push those transactions to them and to the mempool. That's kind of the economic value they're getting. On the security side, they're gonna going to become our Bitvm bridge operator. As I mentioned, the mining pools actually care a lot about the security as well. They are very good on the security operation. So these 3 mining pool will become the operator, operators among the other like 20 or 30 in total in the future. And as I said, as long as one operator within any of these 20 operators is secure, then our bridge is secure. That's our, fraud-proof, trust minimized kind of mechanism.
Yeah.
So we have 3 very, very professional mining pools joining and maintaining security along with many others together. So that's kind of how we see the security side.
That's great, and I like that because for me, the way I look at, especially when it comes to Bitcoin, aligning incentives is very important. And I'm actually a Bitcoin miner myself, and I can attest to the cost that you get with your fees for hydro and power and everything to the actual rewards that you're getting in Bitcoin. So that to be a successful institutional miner, you're gonna have to diversify your income, which is kind
Yep.
of like what Hut 8 does. A lot of people are selling data services for AI or any other data center services available. So that's awesome. So for the consumer, what kind of like different type of products are you offering? I know you do DeFi, so I assume there's going to be some yield bearing stuff. I believe you guys have a token as well.
Right. Yeah. So I think before I answer the question, right? First of all, great question. Before I answer the question, let's zoom out and look at the landscape.
Hmm.
Bitcoin is 15 years. It's already huge market cap. It's over 100K, right? Since last year. It's amazing on the price. But for average consumer, it's kind of difficult to really say, okay, it's gonna easily go to a million nearly soon, right? And all that. Obviously, we are bullish. We try to. But for the people who actually want to hodl Bitcoin for the long run, you unless you sell your Bitcoin, there's no really like how to say cash in or cash flow, right? For your daily expenses, all that. And a lot of people are here holding Bitcoin for the next 10 years. They're not really interested to sell.
Hmm.
Then what? But in the last 15 years, Bitcoiner has been hodling their Bitcoin in the cold wallet. And some of them actually paying custody fees to guys like BitGo, Anchorage, like Coinbase Prime. Those are the recent ones. Previously, that's like others like Zappo Bank and so on, right? And obviously, mega respect on this institution custody platform. Amazing work they're doing to this industry. But for Bitcoiners, we believe the vision should be instead of paying your custody fees to hodl your Bitcoin, you can actually earn yield by staking your Bitcoin or doing other things like become like a liquidity provider. So that's kind of what we see. Like without selling a Bitcoin principal, you're getting yield on top of that,
Are you
right? No
guys
matter
offering lending on Bitcoin or no?
we do lending as
Yep.
well. We have a few lending protocol are pretty solid, like Avalon Finance, Desync. So they have a pretty big TVL. So a lot of lender borrower are already in that platform. They get quite some good support from the miners, some well liquid provider, but more importantly, some people just want to borrow some Bitcoin, right? So it's lending is a very interesting use cases in the Bitcoin space. I think it's very proven, battle tested. And obviously, different lending protocol try to target different audience. Some are very institutional driven, only accredited investors and institution asset managers and lending desks. Some are very retail driven, right? Like small microfinance kind of lending as well. So I do see there's a product market fit in both sides. But back to your question, right? So Bitlayer, we don't want to just do only lending. And we believe Bitcoin DeFi is entering the space of we can enter to the high frequent type of DeFi transactional protocols as well. So what does it mean? High frequent, right? So staking and lending, those are the low frequent kind of protocols. Meaning, if you have your Bitcoin, you want one Bitcoin, you want to enter, let's say, a staking protocol. You do one interaction, as a transaction, right? You provide your liquidity, with your one Bitcoin, and you enter this staking protocol. You don't necessarily need to do that much after you want to withdraw and so on, right? So we call this low frequent.
Mhm.
But I think that's cool. Like Babylon sets a good example. They had some kind of Cosmos yield. I don't think the Cosmos yield was that attractive after they realized it's less than 2%, and it costs you quite a lot of fees to withdraw as well. And that's kind of the realization in the entire space. Bitlayer, we have been always focusing on the high performance infrastructure. That's our vision for V3. And why we want to build this high performance, like parallel EVM, parallel execution EVM, is we want to enable the high frequent trading protocols, such as perpetual DEXs, derivative trading like option protocols. So people are able to pay and buy put options, call options to predict the Bitcoin price,
Mhm.
to do some leverage trading on chain without KYCs, without some with counterparty risks, some without counterparty risks, but it's fully custody, self custody, and on chain, right? So those kind of DeFi protocols are not necessarily very well adopted in Bitcoin space, and I do see there's a big adoption. Like Deribit, right? This company from Netherlands, they got acquired by Coinbase, like a couple of billion, right? So I think I do see there's a big demand in the future for Bitcoin derivative trading, but we don't have the solid infrastructure for that. So that's kind of our V3 vision to build that. For the next wave of Bitcoin DeFi.
Yeah, because I think when you start getting the ETFs and then becoming more institutionally adopted, that's more of something that they can understand because it's not like it's something they've already been doing with other assets. So
Yeah.
just doing it on Bitcoin is going to be something that they can get into that they totally understand. Now, going back to safety, you were talking about the lending and the yield. So how do you guys get your yield? Do you guys have like proof of reserves? Because we know what happened with FTX, and everybody has a
Mm.
bad taste in their mouth when it comes to
Right.
lending and all those yield earning
Yeah.
chasing yield, right? Yeah. So
Great
what?
question. So FTX, the way they do the deposit or custody is actually centralized. It's we call this centralized finance, right? CFI. That's the whole point why we have DeFi. We need DeFi, right? It's on-chain transparent. It's we have this module of proof attestant, provided by Chainlink. Chainlink is our ecosystem partner on Oracle data feeds and also CCIP side, and it's DeFi, so it's customer fund is self custody.
Good.
It's stay in customers Web3 wallet, right, and also their Bitcoin wallet. So we don't actually hold, reserve, or do the custodian as a custodian, as like asset manager. We as a decentralized platform, we offer the Bitvm bridge, we offer the verifier, we support our DeFi protocols, which they're all self custody as well.
Hmm.
So there's no centralization
There's no holding of the
custody.
assets. So
We
how
don't-
do you get the yield then?
So yield is come from like basically the liquid provision, right? So there's a lending yield that's normally on the lending rate side. There are basis trading. There's a few multi-strategy kind of yield protocols that we're supporting, such as Bitfi, Desync, Lorenzo. So different protocols, they do different strategy. Obviously, those are the high yield. We're looking at 5 to even 12%.
Okay.
Those yield have some counterparty risks on the basis trading and market neutral trading and stuff like that. But I think that's the risk people have to pay to getting those higher yield, right? And there's no free lunch, so to speak, right? Like you're getting yield, but
Absolutely.
it's
Investing
actually,
itself is risky. There's risk in
yeah,
every type of investing. You can never go to zero risk. The only thing you can do is find out what your risk profile is and then,
exactly,
go accordingly. Okay, so that's
yeah,
great. And I think you already talked about, I was actually one of my questions is going to be about the bridges and the security because that's the big scary thing, all these bridge hacks and everything like that.
right,
So it's great that you guys are using the miners because that's a great way for them to get more revenue and to be able to use the Bitcoin security, which is utmost important. I think, especially when it comes to Bitcoin customers, because Bitcoin, number one thing on Bitcoin people want is security. Like people are very hesitant to use new things on Bitcoin, especially there's that crowd that are the Bitcoin maxis that are only want Bitcoin and are hesitant to try anything else. So building good products with security, with all the values that Bitcoiners have in mind, I think is very, very important. So tell me
absolutely,
about the Bitlayer token. So tell me about the
okay,
supply and what you guys use the token for and whatnot.
sure. So as you see, there's a lot of infrastructure products we're building, right? It's an ecosystem we are facilitating. We aiming to build a very diversified, big ecosystem with a lot of developers doing all kinds of things. So it requires governance in the future. We need to have a token for ecosystem incentive. Obviously, we have our validator sets, we have our node operation, and all that. So utility of our BTR token, which is our governance token, which will allow token holders to do voting, to do fee switch. We can change the gas fees. We can even aggregate, bring new assets to the ecosystem for staking and other things. We can change the number of the validator sets. The beginning of sets, we are looking at around 100 validators. We can increase more, but it would need to go through voting. So the token holders will have that kind of right. So the governance is a very interesting, nuanced topic, right? It has a lot of the wisdom, a lot of how to say practical use cases and examples from Ethereum world. So I personally worked in Polygon before, and I know my friends, working for many other foundations such as Arbitrum, Solana, and so on as well. So the BTR token is a governance token, which is maintained, issued by the foundation, but it will be distributed to all kinds of miners, validators, and also the community. We're doing all kinds of incentive program as well, right? That's that. The total supply is 1 billion, and it's not another weird fancy number. It's a number a lot of people know and feel comfortable with. And we already went through our private rounds investment that last year, backed by a lot of the institutions such as Polychain Capital and Franklin Templeton. And we are getting close to distribute to the communities with airdrop campaign, with other kind of activities. Quite a lot of the community members has been using our chain for quite a while. So we definitely actually are excited to reward them with our airdrops and other things as well. We did a few very useful, effective campaign with Web3 wallet partners such as OKX Wallet,
Mhm.
which they bought 600,000 users
Wow.
last year. The Binance Wallet, we had one of the biggest campaign ever in their history. Early this year, they brought over 1.2 million users participated in our ecosystem
Wow.
campaigns. So yeah, the party has been pretty big since last we launched, but we want to get it bigger. I mean, compared to Solana, other ecosystem, we're still a very small, young ecosystem as we speak. Yeah, so that's having the token is to the right people, to the right community member is what we're looking for. Obviously, we are actively engaging to talking to market maker, liquidity providers, and all kind of liquidity distribution channels as well. And obviously, a lot of people knows to in order to have your token launch successfully, you need to work with the right partner on the exchange side, no matter it's centralized exchange or decentralized exchange. So we're being actively engaging and applying for that as well in the last couple of months.
Awesome, man. I really like what you guys are doing. I think it's needed in the space, especially as we have more and more adoption. We need. I'm a very big advocate when it comes to mass adoption. That you have to understand, like people get like very upset when new things are built on Bitcoin and stuff like that. But we have to be able to account for everybody. Everybody has different values, different strokes for different folks. Is what I like to say. Everybody likes different things and values things very differently. So we have to make products that can be there for everybody, whether it's the institutional investor, the people that want to use centralized stuff, the people that want to use decentralized stuff. We got to make stuff for everybody because that is mass adoption. It's everybody. It's making products that everybody can get along and use with. So tell me about what you guys have for the future. What's the future vision of Bitlayer? What is maybe some goals that you guys want to achieve in the future coming up?
Yeah, thanks for the question. First of all, yeah, thanks for the comments. Good to know that mass adoption is something you believe as well. I think it's a right, just comment on that first, right? It's a liberal market. It's a permissionless network. People have certain different type of demand. Some people are Bitcoin maxi. They don't like any use cases. I think that's fine. But there's certain and actually increasing amount of new demand from the institutional users and Bitcoin holders and also retails. Ordinals was a good example, right?
Mhm.
People liked and had fun with it. And yeah, the network needs to pay itself. So for the miners, they need a new revenue stream. We need to build the infrastructure and build use cases around Bitcoin to make Bitcoin more usable, to have more activities on the main pool on the network, and to make Bitcoin more sustainable. And otherwise, it's a very expensive dead chain. That's not what we are looking for, I think, right?
No.
So I think for the future of Bitlayer, I think next upcoming weeks is very important. We want to make sure we have successful launch, and obviously that's just one milestone. The journey continues definitely, and also will be even more exciting after the TGE. We have a few conference we're gonna go and speak in the main stage, especially in the KBW and Token 2049 and a few others. We will engage more developers among the Bitcoin cores, among the researchers, but also more importantly among the DeFi user builders. So we're gonna roll out some kind of ecosystem campaign and program. We might work with a few protocols to build our ecosystem fund to further engage and support really good upcoming DeFi use cases and so on. And we might even expand to other category outside of DeFi, like AI agent, a few other interesting pioneering category
Mhm.
into to explore the AI on Bitcoin, things like that, which is still very new. I'm learning actively every day. But we want to
That's a
make
whole
sure.
nother rabbit hole altogether.
Yeah, yeah. So we want to make sure it's a right useful use cases with real adoption and a private market fit, not just for the sake of chasing hype. We're actually now kind of team chasing the narrative around that kind of things. With that said, I think the V3 mainnet it's gonna launch hopefully end of this year or maybe early next year. We want to launch this high scalable parallel execution, infrastructure. Our head of engineering team, like Daniel and his team used to work in Alibaba and then Facebook before. We had a very strong engineering experiences building high scalable ecosystem and chains. So I think those kind of capability we're gonna gradually unlock after we launch our V2, after we launch our mainnet version of Bitvm bridge, after we have certain big level of traction, and then when the demand is big enough, we're gonna roll out the V3. So you can kind of see how we roll out all the things, right? We don't want to build that to over engineer ourselves. We want to build that along with cultivate the use cases to have real demand, and then we level up to another level of infrastructure. So that's kind of how we see the best way of product market fit. Instead of just like keep saying, "Oh, we are the best nerdy technology company in the world," we actually have a good balance between the business and the tech at the same time.
Awesome, man. Well, that's great. Tell people where they can find you guys online if they want to learn more about Bitlayer.
Sure. The best way to follow us is on our Twitter. It's Bitlayer Labs. We have around 1 million followers already. We'd love to get new members to join. We share all our news, recent events, updates there. Next upcoming weeks will be pretty exciting. We will have our very exciting announcement on the investment side and also our public sales side, and of course TGE. Be sure people to stay tuned on that before it's too late. And obviously, we might have some community engagement kind of campaign, some small kind of AMAs. We give rewards as well. So for retail users, we want to just have fun, maybe get some rewards. Feel free to seize those opportunities. Yeah.
Awesome. Well, guys, make sure you guys like and subscribe. Make sure you guys check Bitlayer out on Telegram. Not Telegram, on X. And you guys can check it out there and get all your DeFi needs sorted on Bitcoin with the security. Thank you so much, Charlie, for taking the time to speak with me. It was a great pleasure. Thank you.
Yeah. Thank you very much, Mike.
All right. Take care, buddy.